Hi everyone, welcome to our first podcast. And my name is Eric Nicholson. Here is Jesus Obregon. I'm investor, wholesaler, Susan's investor, and also general contractor. We will be talking about some important things involved in investment making decisions. And I want to start with introducing Mr. Obregon. And I want you to tell a little bit about yourself, about your background, how you came into the investment world. Just briefly tell us about your path to the present.
Yes. Thank you, Eric, for inviting me.
My pleasure.
Yes, I started my construction company back in 2013. Basically, my construction company was a commercial and residential construction. I was introduced to the investment world because I used to do all the renovations for investors back then. And I was very curious about the investment because it looked to me that we provide our services and the investors actually, bought the properties and they sold the properties and make, I believe in that time, good money. So I was very curious about it. So by 2016, we opened our first company and we decided to do the investment. Since then, we've been renovating properties, selling properties, adding properties to our portfolios, and now it's been growing. And then we have multiple companies that actually does the acquisition, does the disposition, and does the portfolio. So we kind of we're able to effectuate our companies in a better way. And now we have a construction company also that help us to do all our deals. And we have companies that we, have relationship with wholesalers, realtors, and everybody can help us actually get the deals as well. So since then, everything is going well.
Great. And tell me a little bit about investment options, opportunities, and steps.
Yes. So the years that we've been in business, again, we made lots of mistakes. We did things maybe in the beginning, things were wrong, but we learned through all this. And I will tell you that investing in real estate is very simple, nothing really complicated unless you want to complicate yourself, but it's very simple. And we were able to identify, three main components of the whole investment plan. I want to keep it simple that way.
Yeah, let's focus on those.
Yes. For example, we need to know what the deal is, what our deal, our property, our acquisition. And you can have, help from realtors, wholesalers, brokers, any bank foreclosure from the bankers they have, and you can contact them and then have all these array of areas that you can go and get the deals. They can get the property, even knocking on the door, that could be your deal. So you gotta find the deals. That's the first main component.
Find the stream of the leads, sellers that you can talk to acquire the property at the right price.
That is correct. Now, we used to do everything ourselves, but now we have people who actually we can count on, they are responsible, and then bring us the deals. We have, a streamline of, again, realtors, wholesalers, and everybody who wants to bring the deals to us. So we have that one. So that's the main component because without that, you can't do anything. And then number two, once you get the deal, it's for example, Eric, you brought me the deal last time. You got me that one. Perfect. Now, how do I get the money? So then we need to find the money. Now there are hard money, private money. You can get the money from your neighbors, from your relatives. You can find it, from that area, from there. But the idea is, if you want to be an investor, you have to be able to get the funding from a third party. Pretty much OPR, we're calling all other people's money. So once you have that, you need to control your funding because you need to have multiple probably in harmon lenders, finances, financial institutions, private money as well. So all of these are gonna help you to fund your deal. Okay, now we have the deal and we have the money. What else we need? We need the construction part, and that's where most of the investors are. I want to say failing, but they are not taking seriously because they underestimate their construction budget.
Yes.
And I seen this because I remember back before COVID, and now we are 2025. The average of renovation for a full gut was probably between 50 to 60K.
Yeah.
I'm telling telling me, I used to do all that. I bought properties and 60K was the
I'm sure it was like per square feet.
back then. It was like probably $25 or even crazy like that. Even for a contractor, it was a little cheaper than that. But we have a 60K. It was a good renovation, full gut job. Nowadays, 2024, now entering to 2025, the average for a full gut job is between 100 to 120, depending on the site. Now it increases to $45, $55, $65 per square foot. So it has increased. Problem that I see is the most investors are still with the
Living in 2020.
with the all numbers.
Yeah.
And I see a lot of investors that even when they had a deal, they bring the 50K and they can't pay the contractor 100K because they don't have the money. So they need to do the management of the project themselves so they can save money and then find themselves a plumber, electrician, a carpenter. They will find something and try to minimize and be very, very little, expenses, which is okay if you know how to manage. Some people are at a job, some people has other things to do besides, investing, and you only can do one, maybe do two, and then you're stressed out and then they just leave everything. So the idea is to get your numbers in a way that you can actually protect yourself. And again, the construction is a main part because that's money that you need to actually do. And the investment part is this one. This is very simple. Buy a property, create the value. Once you create the value, you can sell it, you can rent it, or you can leverage it to do more. So that's the part of the investment world that I live very much.
Thank you, Susan. Thank you very much to touch on those subjects. One of the very important ones are the acquisition, because that's where you make or break. Because your future outcome of your transaction depends on the acquisition price. And to make a right choice on acquisition, you have to, as you said, you have to educate yourself and learn and understand all the particulars of how are you going to have this property, how much it's going to cost to under current circumstances. And I wanted you to touch a little bit on this because I think a lot of the people miss that point. And they not just on acquisition side, they make mistake, underestimate the cost and overpay for them. And as me and you have seen this a lot, they buy those properties, then they sit on it for the next couple of years. They figure that they can't do renovation, then they auction it off, losing all the money. But also you see there's a lack of understanding of true cost of renovation, your stream of referrals. Perhaps you have dealt with someone who brought the property to you and they were asking you something that they thought was a reasonable cost for it for you to apply. But when you did your math, you looked at after repair value, you analyzed the cost of repair, and then you said, well, I can only afford to pay X amount of dollars on it. And if I overpay, I'm going to lose the money. And we have this ongoing conversations where sellers assume that we're lowballing them. In fact, this is just so obvious when you do the spreadsheet analysis, cost analysis. I want you to touch a little bit on that subject matter, please.
Well, acquisition is the start point of your investment, pretty much. Because if this is what I learned from the years in the businesses, you have to be good at analyzing properties. And the only way that you can get better at it is if you do it every day. We analyze properties. I remember, 40, 50, put it on the spreadsheet before. That was a spreadsheet. I used to use spreadsheets there and then everything, put all the numbers, everything. But now there are softwares, there are calculators, there's so much going on out there. You can get one. The idea is this. You have to calculate your analysis for the acquisition. You're not alone. For example, wholesalers, realtors, and everybody who brings it. So what do I do with that property? And you only have maybe a few hours before somebody else is next. Correct? So what do you need to do? Put all those informations into your spreadsheet or your software, your calculator. But the thing is this, I always request, and I have this in my emails list. I got this new property, so I send the email for the analysis because I'm gonna analyze it first, and I put it right there, and then I'm gonna send it to the broker, the money, so I can get the money if they can fund it. I got it to my two or three realtors. Hey, I'm buying this property. I want to see what the actual or real ARV will be because the wholesaler is telling me its value is 400.
Yes.
Correct? Maybe he's right, maybe he's wrong. I don't know. But, I will have better data when somebody feeds me that.
Can independently confirm.
Correct. And then my construction costs, I have a general spreadsheet so I can just move everything, and then I have a budget for that. So I put all this together and I send it. Immediately in 20 minutes, maybe half an hour at the most, I get the response and say, yeah, this is a good deal or it is not a good deal. Or look, the risk is this, the risk is that. So I can do, and I say, if I want to take the risk and make only 10%, I'll do it. If I gonna make the risk to make only 5%, I'll do it too. Or I made 25%. I don't know. So depending on the data that I get, I do and I say, hey, I want a deal, yes. Or you know what? And I want to waste my time 4 or 5 months in construction and try to sell it for just 1%. I don't know as you call, but we don't operate that way. But in acquisition, the acquisition part itself is create the relationship with the people who are bringing you. And then I personally like to talk to them because I let them know what numbers we're looking at. I will educate them I will give them the tools. Say, hey, this is what we use. If you can use it and goes through that, and then you feel like it's good, you can send it to me. If you feel like it's not meeting my requirements, then I will probably gonna say no. So that's part of the educating also them. Well,
100%. And I will be posting the spreadsheet itself so that everybody can try it and see it and put their numbers on it. But we will also have a conversation with Eric. He's with the Links lending company. And one of the important things that I think that could be easily overlooked is unless you have a cash money that you're going to expand on purchasing and rehabbing, it's very likely that you will finance, at least the rehab portion will be financed by the hard money lender, right? And there are costs associated with financing the money. It's not just interest, which is higher than the conventional loan, could be between 11 and 12% credit rates when in January 2025. You also have to pay the points, and you also have to account for holding costs. As you keep the property, there are expenses, utilities, taxes. You have to compensate for all those. You have to pay for all those. Finally, when you have finished your rehab, you can't just, like anybody who has sold the property in the past knows this, it's not like a car. You can't put it on like cars.com, meet buy it at the parking lot, exchange title to cash, and be done with it. There are closing costs and there are resale costs.
Right.
There are transfer of tax costs. There are staging costs. There are costs involved with selling and buyer's brokers, because you will be hiring someone, a realtor, to list your property to sell it, and then the buyer will probably have their buyer agent who will also want to have some compensation, some commission in that process. So the resale cost alone will be like 10%. And then you have to account for your money cost, which is not just the interest rate, but also the closing cost and your holding cost of the property. When you account for all that, I guess like 15-16% of your selling price will be your cost of selling the property. Yeah. So even if you factor in 30%, if you buy at 70% of ARV minus repair costs, some people might say, oh, you're going to make 30% profit. No, you will not. You are lucky if you're going to end up with 15. And if you squeeze yourself and say, hey, I want this deal so badly that I'm going to buy it at 85 ARV, guess what? You will do all that work. You will spend all that time. You will take all that risk, and you will earn $0.
Yeah, that is right. But also take in consideration the market cycle, because just remember back then in 2024, maybe 2023 as well, you can buy a property and overpay for a property. Let's say the real value is 40K. You can overpay maybe up to 80,000, let's say. Whatever it is. You put 100K on the renovation. The market at that time supported your valuation of, let's say, $300,000. You can actually you sold the property for $300,000.
Right. The appreciation was so fast. There was scarcity of the inventory on the market, and there was oversupply of the buyers, which are not there anymore. Nowadays, you fix your property, you put it on the market, you wait 35 days, 40 days, you don't get offers, or you get offers below your cost.
Right.
And what you end up doing is you are actually keeping the property as a rental because you don't want to sell it now. The appreciation is not there. The buyer is not there. Now you have to find a renter so you can keep the property and wait until the cycle leaves itself out, and when there is a appreciation period comes in when you can actually resell it, right? So these are all very important factors that a lot of people don't really consider, and how current market conditions, I think, were very different from 22, 23, and even 24 first part of 24. And that's very important point. I think a lot of people are still under impression that we are in 2023 market-wise, and we are in 2020 in terms of the cost of the rehab.
Exactly. So what's happening now, and you can feel this in 2025, January 2025, the expectation of the market, is to go up. So there are still people trying to buy, or the sellers try to sell as high as they can because the investor will buy. That's what the mentality is.
Assumption is yes.
Yes, I'm finished that. If you want to be an investor, you not only need to know how to do the investment part, the renovation, everything is, the components are there. But also you need to educate yourself in the cycles and the data that you have on the market, prices, costs, and basically do a better approach on your investment. Because right now, like we were saying, we're sitting down, we're looking at like at 40 properties right now on everything that we have right now, and it really doesn't work any of those. Even if I put an offering all of them, we're not gonna get it because they'd have an impression that they want to sell it for more. So at this point, we're not going to invest. Sometimes we do pencils down. You know what? Let the market go and roll. But if we find an opportunity, we action. At 100, we make it 1 or 2, maybe 3.
Yes.
And that's all. If 40 was maybe 5, 6, and 10, we can do 40 a year. Okay, that's normal. 40 properties a year, that's fine. Last year, we didn't sell anything. We kept everything because you remember the rates were high.
Yeah.
So we kept everything, and our investors, we do all portfolios right now. This year, we start again. Same way, we're probably gonna be doing the same thing. We're gonna just buy and we're gonna do portfolios. If the market gets a cycle in the next couple of years, then there will be the time to sell. This is the time to buy. Maybe the time to just wait for the deal and create the deals. And we gotta time it as well.
So very important point you are making here. So Jesus is an investor, he is a flipper, and he also holds the prop, and he changes his exit strategy based on current existing market conditions. As market evolves, you have to adapt to it. So what he is saying is that if he would be quickly buying, acquiring, fixing, and flipping the properties in the past few years, right now, since maybe second half of 2024, and his projection is in 2025, what he will be doing is actually acquiring the properties when the right property at the right price comes, and he will hold it as he's holding other acquisitions, and he will wait for the cycle to leave itself out, which is right now is a period of time where you will be struggling if you try to sell your property at the full market value. So he will hold it, and he will sell it maybe 2 years down the road, which is he's looking at everything from short and long-term perspective, and he's making his decisions strategically based on his analysis and understanding of current market conditions. And I think that a very, very, very valid point you have made. There is it's not a rocket science. Real estate is not a rocket science. It's in a way it's kind of like it's kind of like simple, right? But having said that, it's not something that comes effortlessly. And one of the things you have to put a lot of effort in, you have to put an effort and truly educate yourself. Learn as much as you can. Talk to people, talk to contractors, talk to realtors, talk to buyers and so talk to people in the industry. Educate yourself. Learn what are the components of the investment. What are the costs involved with rehabilitating the property? What is the acquisition price that you should be looking at, which is determined by the after repair value and whatever profit you want to make, which you can't know about unless you know all the components involved, unless you analyze all of that, including the cost of borrowing the money, holding the property, all those things. Although if you break them down, it's not a rocket science, simple, but if you overdo, what's going to happen is that you will make one mistake after another. Right. And as we unfortunately see this every day, when people overpay for the properties, they pay 200% of what that property actually is worth, assuming that they've had a great deal. And then what we see is that they're sitting on those properties, they're not renovating them, they're not able to recover their costs. They end up auctioning it off and losing all that money, right? Which is, we will talk about it in one of our future podcasts, how we can help those type of investors. We will have solutions for those as well. What would you like to sum up conversation with? What would be your final thoughts to kind of like wrap it up?
Right. Yes. the idea of the investment of the investor itself is to educate yourself. That's number one, because this is what I always say, that you can be a student, of everything that comes to you. You can study everything, get the knowledge, and then you apply it. Now, sometimes we are followers. We want to hear one guy and then do whatever the guy does. Another guy and whatever. I think if you listen to 1, 2, 3, and 4, and then you make your ideas better.
Yes,
then
you like critical thinking.
Yeah, and then
Make your own decision.
act on things that are available for you. Now, if you want to speed up, yeah, great. You find someone, like I said, there are opportunities for investors too, that we can help them out just to expedite the process. But you still need to put the work on getting a study and get everything, all the knowledge you need.
Yes.
Like I said, it's very simple. The only thing is a little more work.
Put an effort then.
Correct.
It's not going to come on a silver plate.
So, and that's the main thing, to be prepared, because someone who is prepared has a better chance to survive, in the market at that point. So you have to arm yourself with knowledge first and people around you to help you as well. So that will be my final approach for this one, because at the end of the day, all the properties are there. The market is right there. It's not gonna go nowhere. It's not like I lost my time to buy. I lost my time. Well, yeah, not really, because the real estate is still, you can do multiple things with real estate, not just a fix and flip.
And I couldn't agree with that more. The mentality of let me rush into this, that which is emotionally guided, kind of like, I understand the passion and desire to jump in, do something. You don't want to just procrastinate indefinitely. I understand your desire to get in and do something, but having said that, God's sake, take your time, analyze your deal, look at the numbers, talk to people who are more experienced and have done this multiple times, understand what your exit strategy will be, and then make your offer and buy the property. Don't just buy the property because, oh my God, if I don't buy the property today, I'll just I'll be out. No, you will actually be out of business if you rush yourself, buy the property at the wrong price, overpay for it, you'll just lose the money. Now, if you want to lose money, of course, go ahead and buy at any price, anytime you want. But what Jesus is saying is that it's better to take your time, put an effort, educate yourself, understand what you are getting into, understand your exit strategies, the numbers in front of you on a spreadsheet, confirm with experts in the field, realtors, contractors, that those numbers that you came up with are accurate, and then you will figure out your acquisition price, which will allow you to make some profit at the end of the day, rather than just buy the property for the sake of buying it and then losing all your investments, all your hard-earned money, all your savings, which will be very frustrating experience. And we obviously don't want our fellow investors in the field to face. And so I really appreciate the time that you took to come over and share your wisdom, your experience, your knowledge with our viewers. I hope that we will have more podcasts like that in the future, which we will gear towards educating our audience and helping investors out there to make the right decisions. So thank you for that, and I look forward to seeing you and talking to you again.
That's great. Thank you so much, Eric, for the invitation, and hopefully this helps your audience and we can grow this network of people and be able to help them all.
Thank you.